Hello, everyone, and welcome to today's Explainer. We are unpacking all the crazy market action for August 10th, 2026. And wow, if you were watching the tickers today, you probably felt a little bit of whiplash, right? That's because today's entire session was basically defined by this massive tug of war. On one side, you had these incredibly strong domestic earnings pulling the market up, but on the other side, geopolitical tensions dragging it right back down. The result was a seriously narrow-range session that kind of kept us all on the edge of our seats.
Okay, let's dive right in. Here's a quick look at our agenda to make sense of this tug of war. 1. We'll start with the market summary of the day. 2. Today's trading journey. 3. Our top gainers and losers. 4. Sector performances. And finally, 5. Macro and global factors. Starting off with Section 1, Market Summary of the Day, where we look at the headline numbers.
All right, looking right here, the Sensex actually managed to cross the finish line at 78,550. Despite some really heavy resistance throughout the day, the bulls dug their heels in and managed to pull off a victory, closing in the mild green. We're talking up 50 points, which translates to a super modest 0.06% gain. To put that into perspective for a second, if you compare our previous close on August 7th to today's finish, you can see just how incredibly tight those margins were. The Sensex just nudged up from 78,499.17 to 78,550. Meanwhile, the Nifty 50 secured a slight bump as well, moving from 24,570.65 to close at 24,598.60. That's up nearly 28 points, or 0.11%. So hey, it's a positive close, but definitely a hard-fought one for sure. Let's move on to Section 2. Today's trading journey, the tug of war. This brilliantly illustrates how the day actually unfolded. We kicked off the morning with some mild optimism, The market opened in the green, Sensex at 78,501, and Nifty at 24,581. But as the day wore on, that optimism just kind of fizzled out into this midday slump. By 3 p.m., the market dipped into a negative, super narrow range. Nifty was down about 5 points, Sensex down nearly 39 points. Honestly, it looks like the bears were totally taking control. But then, in the final hour of trading, bam, we saw this sudden, sharp recovery that totally wiped out those losses and literally dragged the indices right back into the green just before the bell. Like I said, an absolute tug of war. All right, Section 3, top gainers and losers, the battleground. Let's see who actually won and lost out there today. So, among the top gainers, we had Titan, Grasim Industries, and Tata Steel totally leading the pack. We also got some mild green finishes for heavyweights like Maruti Suzuki, ICICI Bank, HDFC Bank, and L&T. But, contrasting those wins, we had some massive index heavyweights that really dragged the market down today. Bharti Airtel, Reliance, and TCS all closed in the red. And look, when giants like Reliance and TCS are pulling downward, it makes the upward climb for the rest of the market incredibly steep. Now, what is absolutely fascinating on this slide is the sheer upward momentum of two specific standouts today, Titan and Oil India. Titan was a top Nifty 50 gainer, surging by a massive 2.84%, and Oil India wasn't far behind at all, spiking up 2.7%. In a narrow, sideways market like we had today, these kinds of jumps are huge. So what fueled this? Well, it all comes down to earnings. Titan's stock jumped directly on the back of some seriously strong Q1 results. Meanwhile, Oil India spiked because they reported a staggering threefold increase in their quarterly profits. I mean, it just goes to show that even when the broader market is totally struggling to find a direction, spectacular corporate earnings are always going to act as a massive catalyst for individual stocks. But here's the crazy irony of the day. While Oil India celebrated a massive 2.7% win, the broader Nifty Oil and Gas Index actually closed down by 0.6%. Why? Because the sector as a whole is just suffering under the heavy weight of rising global crude oil prices. It's honestly a perfect example of how macro pressures can suppress an entire sector, even when one individual company inside of it is absolutely crushing its earnings. Which brings us nicely to Section 4. Sector performances, winners, and laggards. So, where was the smart money actually flowing today? The sectors that really outperformed and propped up the market were Nifty Realty, Nifty Private Bank, and Nifty IT. These were essentially the safe havens for buyers today. On the flip side, the Nifty PSU Bank sector distinctly underperformed, facing some noticeable selling pressure compared to its private counterparts. Let's dig into those wins a bit. The Nifty IT index rose by 0.4%, and that was heavily supported by gains in major players like Infosys and Tech Mahindra. But hey, it wasn't just the large-cap IT stocks that did well. If you look at the broader market, there was some really solid positive strength out there. The Nifty Midcap Index actually outperformed the benchmarks, up 0.66%, and the Nifty Small Cap Index finished slightly in the green too, up 0.16%. So right underneath the surface of that flat Nifty 50, there was actually a lot of healthy buying activity going on in the mid and small cap space. Finally, Section 5, Macro and Global Factors, the Bigger Picture, because local moves are always tied to global forces. Now we have to talk about the elephant in the room today, oil. Brent crude crossed the critical $84 mark. And this wasn't just some random market fluctuation. No, this was triggered directly by ongoing geopolitical uncertainty regarding the reopening of the Strait of Hormuz, which is, of course, intertwined with all the uncertainties surrounding the U.S.-Iran agreements. So what does this actually mean for us? Well, it triggers this crucial chain reaction. India is heavily dependent on importing its oil, right? So a geopolitical choke at the Strait of Hormuz immediately leads to higher Brent crude prices. That higher price tag directly increases pressure on India's national import bill. And that, in turn, puts severe strain on the Indian rupee, which today, by the way, hovered around 95.25 to the US dollar. And naturally, it stokes fears of domestic inflation. This chain reaction is exactly what was dragging on the market and capping our gains this afternoon. But wait, on the other side of this global tug-of-war, we actually had very positive cues from Asia. Asian markets opened remarkably firm today. And the reason is kind of funny. Recently released weak U.S. jobs data ironically did the global markets a huge favor. Weak jobs data means the U.S. Federal Reserve is way less likely to aggressively hike interest rates. With those rate hike fears reduced, international markets basically breathe this huge sigh of relief. The Japanese Nikkei surged by about 2%, and the South Korean Kospi gained 0.8%. That global optimism from Asia is exactly what gave our Indian markets the momentum to open in the green this morning. And we can't ignore the institutional money. We can see strong underlying confidence in the latest institutional data from August 7th. Both foreign institutional investors and domestic institutional investors were net buyers. FIIs bought equities worth over 480 crore rupees, and DIIs bought equities worth over 235 crore rupees. This solid institutional support is very likely what fueled that crazy final hour recovery today, basically stepping in and preventing the bears from taking over despite those painfully high oil prices. So that leaves us with one massive question as we wrap up today's analysis. We've got strong domestic earnings, active institutional buying, and positive Asian cues pulling the market higher. But on the flip side, we have crude oil prices surging past $84 and a weakening rupee dragging the market down. You can literally feel the tension. So which side of this macro tug-of-war is going to break first? Who will claim victory in next week's trading sessions? I'd highly recommend keeping a really close eye on the Strait of Hormuz and those institutional flows. Thank you so much for joining me for this explainer. Keep learning, and I will see you in the next one.